Global financial markets, already rattled by elevated interest rates, now face a fresh dose of geopolitical uncertainty following Hamas's surprise attack on Israel. Sentiments in European markets were soured by the uncertainty, and oil prices pushed energy stocks higher. Chinese stocks declined as markets returned from a week-long holiday that saw disappointing levels of spending and travel. In the U.S., markets are digesting the geopolitical developments in the Middle East, drama at the U.S. Congress, and also bracing for the third quarter earnings season, which starts today. U.S. futures were lower ahead of open as investors appraised the many drivers with caution. Well, Arise business analyst Bode Ososami is here with us as the U.S. markets open. Bode, thank you so much for joining us on Newsday. Now, it must be a tough position to decide how to trade today. What are your thoughts? Should traders just bill for safer treasuries?
Well, certainly there are more than a few drivers to juggle, and the Middle East turmoil is ratcheting up a lot of uncertainty for already battered market. So this is not the situation they want to be in, and I expect there'll be a lot of caution. The situation in Israel has to be the most compelling issue for them to deal with now, given the impact it could potentially have on oil prices and some of the other sectors. But it's also the start of a key week for markets. Just like you said, as the big banks, including Citigroup, Wells Fargo, JP Morgan, Chase, they kick off their third quarter earnings season. Expectations are optimistic, but we'll see how this quarter fares. Investors, of course, will want to know the thoughts of bank CEOs, especially about the economy and their businesses and the future outlook. Also, like you mentioned, the chaos in Washington after House Speaker Kevin McCarthy was removed raises the threat of another impending government shutdown and concerns by Moody's about credit worthiness of the government. For the Federal Reserve, it wasn't all bad news last week. Remember, we saw evidence of taming wage growth. That's a major driver of inflation in the Friday jobs report. But let me just go quickly to see how it's all starting. The expectation was that it would start on a soft or negative note, and I think that's what we're seeing. NASDAQ is down 0.95%. Dow is down 0.15%. S&P 500 also down 0.44%. As the NASDAQ is down the most. But on Fed, on inflation, there will be two inflation reports this week. The markets will be looking at the PPI, producer price inflation, on Wednesday for the US, and the consumer price inflation also for the US, the September data on Thursday. Both will unveil factors that could affect the Federal Reserve's forward path on interest rates. But back to the Hamas attack, which I think is the main issue that all are watching. Typically, you get an initial shock and risk aversion, which would sour sentiment. We saw that in Europe, although to some extent, oil prices, of course, going up helped the energy stocks, and the FTSE, which is heavier. The energy stock and the defense stock sector came up positive, which is probably why the FTSE is bucking the trend. As the UK index, it's up 0.13%, just trying to put the latest numbers up. DAX is down 0.81%. CAC 40 is also down 0.68%. Let me just correct that. About 30 minutes ago, it was up 0.13%. I see the FTSE 100 is now down 0.14%, but you can see that it is down the list of all the three indices, which is the impact of the energy stocks there. The other thing, of course, is how is this going to develop? I spoke to our chief correspondent, John Cookson, closely following developments, is probably in Israel already, and he says he doesn't think we're going to see an escalation to a regional crisis, mainly because the Palestinians in the West Bank and Hezbollah have not fully joined in with Hamas here. But if we do see regional escalation, definitely that is going to have a bigger impact on oil prices, which we'll talk about later. Airlines, of course, have cancelled flights and they see higher fuel costs, which explains why IAG, that's the British Airways, down 5.6%. Lufthansa is down 4.04%. Lockheed, that's the defense stock, is up 7.44% for obvious reasons. And a lot of the other defense stocks in Europe, like SAAB, is also up 7.96%. Leonardo, that's an Italian defense and aerospace stock, is up 3.71. And also we're seeing other defense stocks like Rheinmetall up 4.79%. So it's good news for defense stocks and oil stocks like ExxonMobil, Chevron, all in positive territory. ExxonMobil, as we speak, is up. Shell is up 2.27%, and I don't have ExxonMobil is up 3.33%. So I think the mood definitely is something that is still sour, even though all stocks are looking up. Even that, I want us to still be very cautious in terms of how high it would go, given the fact that there is still a supply demand issue there, given the fact that Saudi Arabia over the weekend, we'll talk about that also later, they did a deal. They were doing a deal with the US and actually Israel, which may have been scuppered now, to see how they can provide more production into the market if oil prices stay high. One thing I must mention, tech companies in Israel could also face disruptions. The high-tech sector are the fastest growing sector in Israel, crucial for economic growth. They account for 14% of jobs, and perhaps that explains why Amazon is down 2.38, Nvidia is down 2.66, Microsoft down 1.01, Tesla down 2.64, and I guess the exposure to Israel is something one has to watch for, especially from the tech sector. So it's broadly cautious, and I think the big risk, obviously, is the fact that the global economy, if it faces a third inflation wave driven by high energy costs and new geopolitical implosions, the flaring of the tensions in the Middle East could easily drive inflation back up again, and that would undermine the efforts of central banks to bring inflation under control.
All right, Bode, you will need to hold on as we take more business stories. Now, the fallout from Saturday's surprise attack on Israel by the Palestinian group Hamas reverberated through Middle East markets, sending stocks sliding and setting the tone for a volatile week. Several airlines suspended service to Israel this weekend after a surprise attack by Hamas, and Israeli retaliation left hundreds dead. United Airlines, Delta Airlines, and American Airlines, with other global airlines, are canceling flights to Tel Aviv.
Wall Street is bracing for the potential downgrade of the U.S. government's coveted AAA credit ratings. The dramatic end last week of Republican Rep. Kevin McCarthy's short-lived run as U.S. House Speaker has Wall Street on edge about the threat of yet another government shutdown potentially in mid-November, when a 45-day temporary spending bill is set to run out.
Now, European Central Bank President Christine Lagarde said the IMF has cut its forecast for global economy. Christine Lagarde told reporters that the IMF has revised down its growth projections worldwide, except for the United States. The IMF is set to publish its latest outlook on Tuesday, having in July raised this year's prediction for world's growth as well as for most major economies. Now, it is currently seeing a global GDP expanding of 3% in both the 2023 and 2024 forecast, with U.S. output rising 1.8% and 1%.
The IMF and World Bank gather in Morocco on Monday for their first annual meetings on African soil in 50 years, under pressure to reform to better aid poor nations blighted by debt and climate change. The International Monetary Fund and World Bank traditionally hold their annual gathering of finance ministers and central bank governors outside their Washington headquarters every 3 years.
About 3,900 auto workers members with Mack trucks will go on strike today after majority of members rejected a tentative agreement reached last week by the union and company. The agreement was voted down by 73% of UAW members who voted, the union said on Sunday night. UAW announced online that workers at facilities in Pennsylvania, Maryland, and Florida will go on strike starting at 7 a.m. Eastern Time today.
HSBC has signed an agreement to acquire Citigroup's retail wealth management portfolio in mainland China, the UK lender said on Monday. The business comprises $3.6 billion in assets and deposits, as well as wealth customers across 11 large Chinese cities.
Pharmacy employees at some U.S. Walgreens stores, including pharmacists, technicians, and support staff, plan a walkout between Monday and Wednesday. Some employees plan to walk out for one day, while others expect to close their pharmacies for all three, the network said, citing employees in 3 states. The walkout is in response to what pharmacy employees call burdensome prescription and vaccination expectation placed on pharmacies, the report said.
Metro Bank struck a deal with investors after negotiations that should give the bank breathing space and fill a capital hole that had prompted talks with regulators. The package announced on Sunday night includes a £325 million capital raise split between £150 million of fresh equity for Metro's largest shareholders and £175 million of new debts from bondholders. The Bank of England's Prudential Regulation Authority approached a number of big UK lenders this week to see if they had any interest in acquiring all or part of Metro Bank's assets.
And OPEC heavyweights said on Sunday oil and gas should not be stigmatized in the climate debate and that the industry had a role to play in an orderly energy transition. Energy ministers from Saudi Arabia, the United Arab Emirates, and Iraq, the 3 largest members of the Organization of Petroleum Exporting Countries, have gathered in Riyadh for the UN MENA Climate Week. The UAE will also host COP28 Climate Summit, scheduled to take place in Dubai between the 30th of November and the 12th of December. For more on these stories, let's cross live to London, where we'll be joined by our Arise business analyst, Bode Ososami. Bode, I want to say thank you for joining us once again. Now let's go back to the oil and gas sector and the attacks today. What else do we know?
Well, I'm looking at Brent crude. It's creeping back up pretty quickly, up 3.6% today as we speak, $87.63 as at a minute or so ago. There were talks, just like I was saying earlier, between the US trying to broker talks between Israel and Saudi Arabia, which would have normalized ties with Israel, Saudi's ties with Israel in return for a defense deal between Washington and Riyadh. And I also understand that the Saudis had promised to raise output as part of that deal. It may be that deal that this Hamas attack is of course, going after, amongst other things. But clearly, this is certainly going to be something that is no more on the table, given the context. Also, OPEC and the International Energy Agency, both big names in the energy industry, are currently in opposite camps, Iran, over peak oil demand. In their 2023 World Oil Outlook, OPEC said they expected world oil demand to reach 116 million barrels per day by 2045. That's roughly 6 million more barrels per day than it predicted this time last year. This contrasts starkly with forecasts of the IEA. IEA said we are already seeing peak oil, indeed, that the world was now at the beginning of the end of the fossil fuel era. OPEC accused the IEA of pushing a narrative that was extremely risky, impractical, and ideologically driven. Still on oil, traders are watching how the conflict affects the production and transportation of oil in the Middle East. As you know, of course, Iran is a major producer, but not just a major producer. Any retaliation against Iran could endanger the passage of vessels through the Strait of Hormuz. But for now, an Iranian mission spokesman say they support but they did not direct the strikes. But if unconfirmed, reported Iranian involvement invokes a U.S. response or an Israeli response, then I think we could start seeing the kind of escalation that could take oil prices beyond $90. But if you look at the premium as we speak, that's the risk premium between $5 to $7. It still puts oil well under $100 per barrel for Brent.
Well, but OPEC said over the weekend they have a role to play in the energy transition. But can we actually trust OPEC?
Well, I think what we should say is we have to bridge the gap in trust. Definitely there's a trust factor here. But the way you bridge the gap is by involvement and participation. And the OPEC heavyweights on Sunday at the UN Middle East and North Africa, that's the MENA Climate Week, said what they had repeated many times before, that oil and gas should not be stigmatized in the climate debate, and that the industry had a role to play in an orderly energy transition. UAE Energy Minister Suhail Al-Mazri, speaking on behalf of Saudi Arabia, the UAE, and Iraq, said the three of them are major hydrocarbon producers, and they also see a responsibility to the world to provide the transition with enough hydrocarbon resources, make sure that it's done in a responsibly priced manner. That is the transition. OPEC justifiably sees the premature disincentivization of fossil fuel investments to accelerate transition without regard for analytics of supply of alternative energy sources. They see that as unhelpful for stability. My take is that OPEC is part of the solution and not the enemy. There's a win-win that can be struck by allowing alternative paths and propositions to be discussed, similar to what the UK, Rishi Sunak, is trying to do. Also, worth mentioning, over the weekend, Kenyan President William Ruto, the President of the African Development Bank, Akinwumi Adesina Musa, Paki Mahamat, Chairman of the African Union Commission, and Patrick Verkwejen, CEO of the Rotterdam-based Global Center on Adaptation. They wrote in an opinion piece that without a 10 to 20-year moratorium on interest payments on foreign debt, the world's poorest continent, of course, that's Africa, won't be able to cope with financial implications of climate change. That the high debt levels built up by African nations has wiped out the fiscal space, and they're burdened in loan servicing, and they're just not able to start thinking seriously about incentivizing cleaner alternatives.
All right, but then the Bank of England was already talking to big banks on rescuing UK's Metro Bank. What is the latest?
Well, it wasn't very clear whether they actually wanted another bank to buy up Metro Bank or whether they wanted to infuse capital. But it looks like they were trying to do both. We understand they have succeeded. Over 900 million pounds was raised, 600 million in debt, and 325 million in the capital raise. The capital raise includes 150 million pounds of new equity and 175 million of a form of debt, and the bank said it will also undergo a debt restructuring effort that would extend the maturity of its borrowings. The deal that was agreed in principle by Metro Bank will see Colombian billionaire Jane Gilinski-Bakal lead the 150 million equity raise via his investment vehicle Spaldi. Spaldi will now own 53% of Metro, so it really firmly very much in control. Metro Bank shares were pretty strong this morning, up about 26% at about 9 a.m. I can see it's up 13.59% as we speak. One source did say that the Bank of England was originally seeking very strongly an outright sale, and they were talking to NatWest, Lloyds Banking Group, HSBC, Santander, JP Morgan, but a deal that wasn't struck. I won't be surprised if they still are pursuing that option. Fitch had commented that Metro earnings are under severe pressure in the short term due to rising funding costs resulting from competition for deposits and given more expensive access to wholesale funding. It looks like their balance sheet is not in good shape, but with this 900 million pounds, definitely, it certainly will be better. But my guess is that this could still be a situation to watch as we speak.
Arise business analyst Bode Ososami, thank you so much for joining us on Newsday.